Hi everyone. Okay, so let's go over exercise 215 and 216. So in 215, we need to prepare the journal entries to record the following August transactions of our new business called For the Love of Pixels. Okay, so on August 1st, so again, they're giving us dates. So now when we record the entry, we're going to make sure that we use August 1st, and then the 5th, the 20th, and the 31st to show what the date is. And then once we start posting into the general ledger, we're going to also use those dates so that we know when they happened. And if you notice here as well, in exercise 216, 216 is a continuation of 215. So it's telling us that it wants us to set up the following accounts. So these are the general ledger account names and numbers that we're going to use. And because these are pre-assigned names and numbers, these are the names and numbers that we're going to use in exercise 215. Okay? And they're also giving us a check figure in 216 telling us that the trial balance total debits are 71,200. So once we get to that point, we can check and make sure that we're correct. Okay, so on August 1st, Joseph Eagle, the owner, invested 20,000 cash and photography equipment with a fair value of $42,000. Okay, so now this is an entry that has more than one thing going on. They've invested cash of 20,000 and photography equipment. So you could do this in two entries, or you can do it in one that's combined. And I'll show you how to do it in the one that's combined. So for this entry, we have cash is being increased. So we're going to debit cash. Photography equipment is also being increased for 42,000. So that's going to be a debit because that's an asset. And then the credit is going to be capital because by Joseph Eagle, the owner of this company, investing in the company, it's a capital account and it's increasing equity. And it's an investment by owner. So you could have it as two separate entries. You'd have cash, 20,000 debit, Joseph Eagle Capital, 20,000 credit, and then photography equipment, 42,000 debit, and Joseph Eagle Capital, $42,000 credit. Or you can do the way they're doing it on the screen and have it combined. Okay, so let's go on to the next one. So we have on August 1st, we also rented, or Joseph rented a studio paying $12,000 for the next 3 months in advance. Okay, so that would be what? They're paying rent in advance. So let's look at our accounts down here. We have prepaid rent, so we can use prepaid rent. So let's come over here. We've got prepaid rent, again, which is an asset because it has value. It means that we can use that studio for the future 3 months. So it's 12,000 debit, and then we gave them cash of 12,000 credit. On August 5th, we purchased office supplies for 1,800 cash. So office supplies is an asset. Okay, whoops. So we can look in our account names that they gave us, and we have office supplies for number 124. So we've got on August 5th, we've got office supplies, account number 124 for 1,800, and that's an asset. But we have to give them cash, so we need to reduce the asset called cash by 1,800. And again, the description is purchase office supplies. So the next one on August 20th, we received 9,200 in photography revenue. It didn't say on credit, So where we received it, we can assume that it's cash. Okay, so we have an increase in our asset called cash of 9,200 and our cash account number is 101. And we have photography revenue because we provided that service of 9,200. And the description is collected cash for photography services. And our final entry on August 31st, we paid 1,400 for August utilities. So again, we look in our list, we've got utilities expense. We've used that service, utilities expense, right? It's for the whole month of August. So we know it's an expense because there's no future value. We've already used it and we've paid it. It doesn't say on credit, so we know it's cash. So August 31st, utilities expense 1,400 and then credit cash for 1,400. And again, don't forget to put in your account numbers. See, note here, the account numbers in the PR column above would be included only during the posting of these entries into, so that's what they're there for, so that you can use it when you get down to exercise 216. Okay. So let's go back over and have a look at the next question. Okay, so for exercise 216, we have our general ledger accounts and our trial balance. Set up the following accounts. So you create your general ledgers, or you can use T accounts, especially where it's a practice question, okay? They're the exact same thing, but again, the general ledger has more information in it. Then using the journal entries, post the general ledger, the balance column format. So that balance column means that after every entry you come up with your new balance. And then it wants us to prepare the August 31st trial balance. So if we come over here, so if we go back up here, there's a couple of different ways we can do it. I like to do it one entry at a time. So actually, you can do, sometimes the question includes both actions. So some people post an entry, the journal entry, and then post it into the general ledger. Some students do all of the entries, the journal entries, and then post all of them into the general ledger, whichever works best for you, just to make sure that you haven't forgot anything. So for this one here, August 1st, we have cash, photography equipment, and capital, and it's August 1st. And we have cash of the 20,000. We have photography equipment of the 42, and then we have capital of the 62. And as you can see, it's all for August 1st. Then we have prepaid rent and cash of 12,000. Cash is being reduced by your 12,000. And we've got debit prepaid rent of your 12,000. And you can see they're doing totals after each entry. You can do that even with a T account, just add an extra column. August 5th, we have office supplies and then cash is being reduced. Office supplies debited 1,800 because that asset is increasing, and cash is being reduced because we gave them 1,800 August 5th. So our new cash balance at this point is 6,200. Then on August 20th, we have cash and photography revenue. Cash is the 9,200 and photography revenue will be down here, credit 9,200. And again, the normal direction of revenue is your credits because it does increase your equity eventually as your statements are being combined or linked as you're creating them. And then on August 31st, we have utilities expense 1,400 and cash is being paid. So cash is being reduced by your 1,400 to give an ending balance of 14,000. And then we have utilities expense of 1,400. So again, because you were keeping score of the overall balance after every entry, we now have our ending balances. Okay, so cash, we have an ending balance of 14,000. Office supplies, 1,800. Prepaid rent, 12,000. Photography equipment, 42,000. Capital, 62,000. Revenue, 9,200. And utilities expense, 1,400. So now that we've got our ending balances, they want us to prepare the August 31st trial balance. So remember, we do that by account number and name. So we're going to take all of those balances, okay, and we're going to list the account number, the account title, and the balance, okay? And as you can see, once we write them all out, the total debits and the total credits, because they have to balance, are 71,200. Okay. And then it has an analysis component. Joseph Eagle wanted to buy a building for his business and took the August 31st trial balance to his bank manager. Is the trial balance used for external reporting? Explain. It's not a statement, is it? The trial balance is not a financial statement. It is an internal working paper or working document used to verify that our debits and our credits in the general ledger are equal and to review account balances. You want to look at these balances to make sure nothing looks out of the ordinary. So if you looked at your trial balance and for some reason office supplies, instead of having a debit of 1,800, had a credit, you'd be able to recognize that, well, that's not right because office supplies is an asset and it shouldn't have a credit balance. You can't have a credit of office supplies. So that's when you go and look at your entries to make sure that everything is correct and where the problem happened. Hope this helps. So to answer that, for your financial statements for your bank, if Joseph wanted to buy a building, I'd suggest him taking in from this trial balance, creating the income statement, the statement of owner's equity, and ultimately your balance sheet, and taking those to the bank. Thanks, everyone.